what was so intriguing about the setup back then. I'll explain it. Try to maybe think of stocks that looked similar that you could have played because of a similar setup. Just throughout the whole entire lesson, I mean, you can ask questions whenever you want. I'm not really going to be checking any chats throughout the lesson. So if you want to unmute yourself, I don't know how the rules are with unmuting, but I'm completely fine with it. So if you want to ask a
Yeah.
question,
If anything, I'll read you the messages because I'm the same way. When I like to do the lives, I don't like to jump back and go to the chat, and I like everybody to be engaged. So yeah, guys, please unmute yourselves. My man is here to answer any questions you guys have. If not, I'll read off the questions for you. Cool.
yeah, for sure.
Rock.
But yeah, something. HKD. I mean, at this time, probably all of you should have heard of it, should have seen it, should have even maybe tried to play it. I mean, this was ran from $12 to 2.555 thousand. I mean, that is just crazy. Over 20,000% within a matter of a week and a half. Crazy stuff. And I don't know if you guys knew this, but I actually played this one from $44 on the screen candelier all the way up to 440s and then re-entered at 330 and played up to over $1,000. I really want to focus on how I entered the play at 44 and what really looked good to me, why I decided to enter a play. I mean, this play was already up so much, right? From $18 to 70. So you could have been, you could be saying, well, Chris, but it was super overextended. Why did you enter? And I'll be, very sure to answer all that. So in the overnight swinging kind of trading market, because I like to look at the market in sectors, not only in terms of like, oil sector, Chinese sector, whatever, but in like the way people trade, like a style of trading. Like some people like to really just scalp. Some people like to day trade. I like to combine those two. That's kind of what I identify myself as a trader. Some people like to do overnight swings, which is something I do as well, once in a while. Some people just try to focus on, just normal swings, a couple week swings. Some people are long-term swingers. When it comes to overnight swings, it's one of those trading styles where if you can master it, it's free money. I mean, this is the way to really grow an account quickly. If you're under 25 grand and you don't have the opportunity to day trade really freely, overnight swinging is by far the most profitable strategy out there in a good market. And when I say a good market, I don't necessarily mean a bull market, just a market where there's continuations. Currently, we're just seeing pump and dumps left and right. I mean, today there are probably 20 plus pump and dumps that ran like 20, 30% and then, ended red. So in this type of market, there's not really many huge setups for the overnights. But a couple of weeks ago, though, like, a week or two, there were. And that's how I found HKB. Something called an inside bar play. That is when you have a mother candle, and the mother candle is the big green candle that you see right here. It's kind of like it starts the trend. That's why it's called the mother candle. And then the inside bar would be the candle which finishes the top and bottom in between the parameters of the mother candle. See, the top right here is in between the parameter right here. The bottom is in between the parameter right here. So it's in between the parameters of the mother candle. And usually when that happens, you have a pretty nice run the following day. But none, I was kind of hesitant to enter there, even though that was a really nice inside bar because it finished red and it was on a downtrend, right? It finished the previous day at 68, opened the following day at 58, and then finished the day at 43. So quite the drop, like 40%, I believe. I think it was like 30 to 50% that day. So it was kind of weird to enter there because it's down 40% of the day, despite it being an inside, bar. It was still kind of bearish until it maybe showed some reversal. And we saw the following day, it bounced off the 9 EMA on the daily. The 9 EMA, for those who don't know, is a 9-day exponential moving average. It's simply used as a support or resistance depending where the stock price is at. If the stock price is over the 9 EMA, then the 9 EMA is a support. If the stock price is under the 9 EMA, the 9 EMA is a resistance. So in this, case, it was a support. So you can see this green candle, the daily, wicks up, almost like dollar for dollar off that 9 EMA. I mean, the wicks up from 37.52 and the 9 EMA was at 37.30, which is nothing when it comes to daily candle, especially with this being a $30 stock at that time. So it started to move up. And it was starting to form something called a double inside bar. Now, whenever you see a double inside bar form in the market, it is almost a guaranteed winner. You can find it, of course, then you're gonna be winning every single time you find it. So of course, that being said, it's not really a common setup to really find in the market because it happens once, every month or so. But this one formed it, and especially with the fact that this was like the biggest runner, the day before, it really was interesting, right? Because it started to hold up despite that big drop. It moved up from 37, and it will hit the peak of the day. It's 59. So a nice like 50 to 70% reversal. I entered it at 44 when this green candle went over the bottom of this red candle. Just kind of personal rule that I have for myself. So I entered it, and of course, in that same day, despite me entering for the overnight hold, it ran up a nice 40%. And the following day would be our breakout day where it breaks up. It does, and what you're guys gonna see a kind of a pattern form where every single day it gaps down but then moves higher. So right here, closes the day at 56, opens the next day at 51, and then rockets up its 80 peak and finishes the day at 77. Following day, same thing, right? Closes at 76, opens at 70, so another gap down. But then of course this is what started the big hype on it, right? It ran from 70 bucks all the way to two, like it was 198.95 or something like that. So crazy move, right? I mean, that's over 100%, and was a $12 stock literally a week ago. So, and then the same thing happens the next day, right? Finishes the day right here at like 180, opens the next day at 164. So gaps down again, runs up even higher. And at this point, I mean, people were like, they're going crazy. People were like, oh my God, is it going to go even higher? Like, no way. And it was blowing my mind every single day. So personally, I did sell over here on this candle here at 440s for my $44 entry. So like it was literally like 950% or something like that on a 3-day equity swing, I believe, right? We entered over here, 1, 2, day, yeah. And then the following day, it dipped down, and I was like, okay, it's doing the same exact thing as it's done literally 3 times in a row now, right? Even on this candle here, gap below the previous close. So 1 candle, 2 candle, 3 candle, 4 candle. So already 4 days in a row, it's on the same thing where it gaps down the long day and then runs up even higher. So once it gapped down right here, I entered at 330s. So really close to that bottom. It was like 278, but it was hard to enter there because the bid was really wide. And then within that same day, it ran to 750, I believe, 760s. And at that point, I was like, oh my God, like there's no way, right? And then it continued to move higher and higher and higher and higher. And I sold most at around 1,600 for my $330 entry. So I played this 2 times. I didn't alert the second time because I knew people that actually holding it still from that 40 entry. Played it 2 times, like I said, from 3.4 to 440, then from 330 to 1.6. And of course, we ran to 2.55, and people were in shock. I mean, you do not see a stock move up this much, ever. Like, I've never seen something like this. So it completely changed the way people look at IPOs. Because now transitioning into today, like literally today on Friday, EGL IPO'd, supposed to IPO at $4. Like remember the $4 point, $4, and look where it opened up at 49.25, and over 1,000% higher than what they were about to issue the shares at. And it runs up, well, continues to halt up from 49.25 to 235.95 at the peak, was down. And then after hours, I mean, the candles are really weird on Thinkorswim when it's like low volume. It moved from 90 bucks all the way up to, well, finished at 194, I believe, at a peak of 200 bucks. So this one, people are saying is like, oh my God, it's the HKD, 2.0. So, and I honestly wouldn't argue against that because when it comes to MEGL, there's just so many people that missed out on HKD that they're going to continue loading the boat on this play. Like I wouldn't be surprised if I woke up on Monday and this thing's at like 300 bucks. I mean, 50% higher than when it finished at. That's, I mean, 50% isn't really much in the current market because you see the stocks around like 200%, but 50% in pre-market on a $200 stock is quite the move. So if that happens, then it would completely like confirm potential for a huge run. And when I say huge run, I mean like $500 plus. Because people are just going to pump this up, way up. So keep this one on watch. I did enter. I sent out an alert and saying I'm entering at 118. As just a lotto with like 500 bucks in, and that kind of paid off. Well, has been paying off so far. So keep this one on watch. People are going to continue hyping this one up, and I really want to emphasize one thing. When it comes to day trading, you have MEGL. You guys probably know this is a Chinese company. So any Chinese company that has volume will run in sympathy. Now we're going to kind of start to transition into how I just play these plays and how I analyze the plays. So ILAG, I told you guys that this is going to run in sympathy to MEGL when it was down at 280s. Actually, I think it was 260s. It was down over here. and it finished the day. Well, hit the peak at 497, almost $5. Finished the day at 470. If you could mute yourself if you're not talking,
Guys, please mute yourself when you join this live.
unless you're like
Yeah.
asking something. It just there's like
Hello, Chris. Yeah, I'm your I'm your big fan. I've been following
shit.
you,
I appreciate it, man.
and so just by observing you, I decided to start the stocks trading in stocks. Can you please talk give us a guide how to start the stocks, or is it the same like the crypto?
So when it comes to comparing crypto to stocks, there is a big difference. When it comes to technical analysis, similar. I mean, crypto is a bit more in-depth technical analysis. With stocks, you get a lot more pumps that don't really follow TA sometimes. When it
Mm,
comes to trading stocks, though, there are more factors you have to be aware of. Sometimes you don't even have to know what the company does. You just have to look at the chart. So you have to understand how much volume it has. Right, you don't want to be playing some pump and dump with really low volume. You want to be looking why it's running. Right, if it's just pumping up with no news, you have to be very cautious of the move. Don't put in too much. If it has news, then put in more. So there are a bunch of factors that go into play when determining when a stock play is good. So I can't really say I'm a huge like I don't have huge knowledge with the crypto market. I'm pretty sure Kenny does. But I mean he can talk about that later. But when it comes to stocks, I mean if you have any
mm.
questions, like you can ask these type of questions at the end. I'll be sure to answer them all for you.
Actually, I am new, and so I don't have like much questions about the stock, but with the passage of time, I will surely text you in the DM.
For sure. Yeah, for sure. Let me know in DM and I'll answer all those questions for you.
Thank you, man. Again, I really appreciate your efforts.
Thank you, man. Thank you for following me. All right. Well, back to what I was talking about for sympathies. Sympathies currently in this market are it doesn't get freer than this. I mean, you can be making free money every single time, right? We had GTX run up yesterday. I don't know if you guys saw this one, but it was a Alzheimer's something something. I don't know what something with the Alzheimer's stuff. I really don't care, but I know it was good news. Something with Alzheimer's, and I know some stocks that have something related to Alzheimer's. I mean, when I say something related to Alzheimer's, I mean they have like a treatment that they're developing or something like that, which was ALZN. We entered this one. I alerted this one yesterday, like 99 cents. It ran up to $1.10 just because of sympathy to CGTX. So finding these sympathies is like free money. I'm telling you. ILAG, like I said, was probably the biggest sympathy I played today, right from 280s to 470s, just because of MEGL. MEGL goes to somehow to like $1,000. ILAG could easily be over $10. Keep this one on watch. If you miss MEGL, ILAG could be your best bet because this one really has a lot of potential for movement, a lot of volume. Like it has a lot of volume. I'm not kidding. I mean, if I check the volume right now on the daily for this one, ILAG daily volume of 69 million, just under. That's a lot of volume. A lot of people interested in it, and this is like the main sympathy to MEGL because I don't know if you guys remember, but when HKD ran, AMTD, the company that owned 80% of HKD, also ran from like $1.40 to $14. So like I said, ILAG could really be a huge runner. So keep this one on watch.
Yeah. So, do you recommend to buy some stocks of this ILAG for some time, like for a week or for 2 week?
I mean, you could, but I mean, of course, Monday we're going to see a completely different story and
Oh,
how
okay.
AGL. But yeah, no, man, DM me after the call and I'll get you sorted out. Good.
Okay. 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 Thank you.
That's it. Yeah, let's kind of talk about my TA. What I look for in most stocks. So as you guys can see, I'm pretty simple. I mean, I don't use the MACD. I don't know why this is here right now. But what I like to use, I mean, first of all, if you guys don't know what the platform I'm using, because I know a lot of you trade crypto, but I use Thinkorswim as my main platform to trade. And the account we're on right now is not an account with money or anything, just an account that I use for lessons, so I don't, expose my actual account info. And these like Thinkorswim setup, I mean, it has these tools that you really can't get anywhere else. It's all on one screen. You could have any indicator you want. You can have multiple stocks open at one time, right? Multiple stocks open. Like I said, these aren't stocks that I'm watching just on this account. You can have all the news open right here, right? So we see all the news related to the stock market at all times. So people are always like, how do you see news? Sometimes this is the best way. You can have an active trader, something like this. It's pretty loud, so kind of cover your ears, but I could
Chris,
quickly,
Chris, we have one question. They're asking, how do you search for stocks? As far as I'm guessing, maybe they're asking if you use like a scanner. Um, yeah, like use maybe a scanner to search for your stocks, or you use like your watch list and change it to like, I don't know. I personally go to my watch list and go to like change percentage, and then I try to attack the ones with the highest percentage. Try to maybe the first top five. Is there any certain strategies that you use when you look for yours? I'm guessing what the trends.
well, yeah, there are multiple strategies that you could be using. For me personally, I like to use the watch list strategy. So in pre-market, I usually wake up around an hour or 2 hours before market open. I'm being straight up right now. You go on Google, search up biggest movers in pre-market, go to like investing.com, look at like the biggest movers and just look over them. Look at which ones you like the most, which setups you like the most in terms of TA, in terms of maybe fundamentally, you've got the news and all that. And then create a watch list every single day, a new one with those stocks that you like, and then watch those plays going into market open. And, as the day goes by, yeah, using scanners, it helps, right, to find new volume, like high volume plays. And there are a bunch of scanners that I can suggest. There are some paid ones, there are some ones that you can create yourself. But what I found is that paid scanners are actually a bit better than, self-made ones because like I don't know why, but they have like better internal coding or something like that, and they just find those plays a bit quicker. They like alert you when there's something with momentum increase. And I could send over a couple of links, after the lesson if you're fine with that, Kenny. So
Yeah,
like,
yeah, brother.
like
Appreciate that, man. Anything you can help with these guys, to learn this, bro, is always appreciated. Thank you, man.
yeah, for sure. When it comes, like people really overcomplicate the process of finding stocks. I have a kind of like a three-step thing to playing stocks, right? How can you make money on the market? Well, you can't make money if you don't know what to play, right? So first step is to find the stock. Second step, you can't make money if you're not in the stock. So second step is to entry, like finding the entry. And finally is the last one is finding the exit. Finding the exit is the hardest part. Finding entry is fine. Yeah, you can pretty much enter anywhere sometimes. Of course, sometimes a better entry will be more profitable, but the exit is the hardest part. And this is where people really mess up. And I guarantee you, while I'm saying this, a lot of you can kind of agree to what I'm saying because it happens to you a lot, where you enter, but then you're like it moves up or moves down, and you're just panicking. You don't know where to exit, and that's really where people start to lose. So creating a proper risk management strategy, understanding how high your risk tolerance is, um, also establishing a trimming strategy is huge. And I've dozens upon dozens and dozens of people DMing me every single trading day, talking about, yo, Crisp, so I'm still holding, blah blah blah. And I'm like, but those already hit profit target. And they're like, well, I thought it's gonna go up higher. That is honest. Okay, I'm sorry if this is one of you, but you really have to kind of fix that. You cannot be holding past a profit target. Okay, maybe it's my profit target and you're playing by your own rules, but still, if you're up 10% on any play, you have to sell something. At least something. Take some profits. Maybe move up your stop loss to limit losses. Maybe don't even, like I said, don't even trim anything. Maybe just move up your stop loss to entry. So these little things here and there really can improve you as a trader. So in those three steps, finding the play is the easiest one out of all of them. Like easiest, because there's so many different ways you can go about finding plays for day trading. Like I said, the watch list method is the easiest one. Scanners are fine, but what I don't like about scanners, sometimes if you solely rely on them, is the fact that sometimes you're gonna miss those like grinding plays where like they move up like 50%, but they don't move up like super fast within like 2 minutes. And also the thing with scanners, it pops so many stocks up in front of your face, and it just gets a bit overwhelming. And like you can't keep track of all of them, and you're gonna miss one right here, then you're gonna miss another one right here. That's why I feel like not solely relying on scanners will allow you to be more profitable, and combining scanners with watch list is what will allow you to be not only more profitable but also more organized and better prepared to enter the plays. because it's all right in front of your face. Like think about it, right? If you create a watch list on TD Ameritrade, all those plays are right there. They're not like you can look at all of them at the same time. So you don't have to be going through from one stock to the other stock to the other stock. You have it all there in front of you, in front of your eyes, all in one list. So that's why I value the watch list method a lot. Super super simple. People just don't catch on for some reason. But you have to. I mean, as someone that joined this call, try to look into that strategy because I mean, if you're asking the question, how to find plays, it means probably you're struggling with finding plays. So try to use multiple different strategies, right? Try to maybe use just scanners for a couple of days, see how that works out for you. Then maybe for a couple of days, try to just use the watch list method, see how that works out for you, and then choose the one that you are not exactly most profitable with, but most comfortable with. Sometimes you might not be really profitable with something, but you're more comfortable with like the other option. So that being said, once you find the play, of course you have to find the entry. And this is a mistake that people have been making lately is entering once it's already running up, like fear of missing out. That's something that you have to stop doing as a trader if you are doing it. I'm not like trying to accuse anyone of doing anything wrong. I'm saying if you are doing it, you have to admit it because the first part of becoming a better trader is understanding the mistake or just something you're doing wrong in your trading. Because like if you're losing, there is something you're doing wrong. You're not unlucky. Stop using that term. I hate that term. There's no luck in the market. I mean, yeah, maybe something, sometimes here and there, there's like partial luck. But you're not losing because you're unlucky. You're losing because you're not a good trader at this point. At this point. I'm really straight up. Sometimes I'm also a terrible trader. Sometimes I overtrade. I go against my rules, and it pisses me off because I have to stay consistent with myself. So we all have our down days and kind of our stretches of losses. But you have to kind of understand where you have to improve, and that goes for anything in life, right? If you don't know where you're going wrong, I mean, how can you improve? You have to identify the problem and then go to solve it. Because entering when a stock is running up is kind of the I'm trying to talk about is just stupid, right? You have to wait for the pullback, maybe wait for a consolidation. And a great example of this would be ILAG. So as we were speaking, I was just looking over on the chart, and there are a couple of examples. So I use the EMAs, the 9, 21, and 48 EMA. Because, like I said, if you have no prior knowledge with it, just DM me after the lesson. I'll explain it to you. And we can see right here it starts to run up, right? This is ILAG from 270s all the way up to 320. So nice 15 to 20% move already. And then it starts to pull back. It bounces kind of close to that red line, moves up and bounces off that red line again, and then moves up higher. Then right here, right, runs up, consolidates, bounces off that red line, the 21-day EMA, runs up higher. Right here, though, consolidates and breaks down. Once it breaks down, it goes like a lot lower. So just by using that one 21-day EMA, you could have timed so many nice entries. And I was scalping ILAG the whole entire day. Entered the 21 EMA, played it up every time it confirmed the bounce. So, like I said, there are many strategies to entering a play to identify what type of trader you are. But the best way of becoming a better trader is, like I said, being very open-minded to the market and understanding everything will allow you to see more things than someone that focuses on one thing. So if you know a lot of graph patterns, you know how to utilize a lot of indicators, a lot of graph tools, you'll be set up very nicely because then you're gonna have multiple things telling you when something's good to enter, when something's good to exit, et cetera, et cetera, et cetera. So when it comes to graph patterns, I mean, it varies really, right? You have different graph patterns be more consistent in different markets. I don't know if you guys know this, but the market is not only cyclical in what sectors move up and down, but it's cyclical in how it moves, right? Bullish, bearish. It's cyclical in what subsectors move. It's also cyclical in what graph patterns are most frequently seen. So currently in the current market, we're seeing a lot of ascending triangles. Let me give you guys an example in after hours. Ascending triangle, if you guys don't know what it is when there's an ascending bottom trend line, something like this, right? And then we have flat trend line on the top. Usually once that breaks, it then runs up, right? You see this breakout here from 420s, runs up to almost 460, nice like 8% breakout within 4 or 5 minutes. So this is what we're seeing, these ascending triangles very frequently. We're also seeing inverse head and shoulders very frequently, so you have to be aware of those. I have a couple examples of inverse head and shoulders and and shoulders from today. So right here's a good example. We have our head and shoulders. If you guys don't know what that is, think about your head and the shoulders on your own body, right? Kind of looks like this. Your shoulder like this, fall down to the neckline. You bounce up to like the head. All the head's always gonna be higher than the shoulders. And then we have like your right shoulder and then break down. So this pattern right here is very important to understand because we're seeing it a lot recently. And here's an example of it, right? We move up, our first shoulder, move down, create our neckline, then move up, hit our head, move down, create our shoulder, and then break down lower. See, it's a bit slanted, but it's still considered. It's a very, very textbook head and shoulder. So this is a very important pattern to see and to identify when you're trading. And the inverse head and shoulder, which I have to find an example of. Not sure if I will. Give me a second. Let me try to scan this stock for an insight. And okay, I'll just draw it out for you guys. So if we know that the head and shoulders, looks something like this, where it's just a normal head and shoulders. The inverse head and shoulders is the same thing, just inverse. So we go like this. It's gonna be bigger, pops up to the second shoulder, and then moves up higher. So it's like the inverse of the head and shoulders, which is why it's called the inverse head and shoulders. So inverse head and shoulders is a bullish sign, meaning it's probably going to reverse up, and the head and shoulders is a bearish sign, meaning it's probably going to go down. These are very basic, like beginner type graph patterns to understand, kind of the ones that many newer traders first learn about. But understanding them will really up your game if you don't know them currently. Because if you're trading the market with no knowledge of like trend lines, graph patterns, you're trading the market pretty much blind. So you have to really understand those, study those. And if you have any questions after the call on what indicators, indicators, graph patterns you should be looking for, how to identify them, and like kind of what they look like, or let's say you find one on a play and you want to confirm with me, always feel free to DM me and DM me, not my bot, because I'm not answering DMs through my bot anymore. It's just too hectic. But here's another example of a ascending triangle. It started to move up, and once it broke out, we enter at 280s and runs up to 370s, 380s. So nice 30% move just off that breakout. And then of course we have another wedge right here, which it breaks out of and goes higher. Then we have an ascending triangle over here. So you can see the ascending triangle and the wedges are very, very frequently seen. Going AMC, for example, believe it or not, I had to resort to scalping AMC as much as I hate it. So right here, we saw a wedge, like a bullish pennant. Something that looks kind of like this. And then once it broke out higher. And of course, towards the end of the day, there was also a descending wedge forming right here. It looked like this. And you can see it broke out of it. So understanding these wedges, understanding these bull pennants, bear pennants, bull flags, bear flags, head and shoulders, inverse head and shoulders, descending and ascending triangles, and like we went over, like the ascending triangle, something looks like this. We're kind of bounced up and down. A descending one, that just the same thing but inversed, where the top trend line is descending and the bottom trend line is flat. And then usually once this happens, most of the time it kind of moves like this, up and down, squeezes, and then like at the bottom it breaks down. And rarely it does break out, but mostly it's a breakdown of those of that pattern. Like the main patterns for you guys to understand if you're trying to trade more day trades, because they're seen very frequently. But of course, when these patterns form, you're looking at something that's probably already ran up. It's consolidating, because these patterns only form, if it's a bullish pattern, once it's already up. The only time when a pattern forms where it's like a reversal is the inverse head and shoulders, because the inverse head and shoulders is just a sign of a trend reversal. That's the only time where you're not going to see it on a move up. So understanding these patterns, and if you have any confusions after this, just DM me and I'll get that sorted out for you. These are the main ones to understand, main ones to study, main ones to apply, because having knowledge and not applying it is just, it's not useless. To be able to take in knowledge and then also trade with it. If you're just holding that knowledge inside your head, it has no meaning whatsoever. So, let's say you don't want to risk money, actual money, with new patterns that you just learned or new indicators you just learned. just use paper trading. Use fake money. I know the whole mentality part of it is not there because you're not using your own money. But understanding patterns, it'll help you out tremendously. And so that's a method that I use when I began trading way back, because I really didn't have a huge capital 9 years back. So I used paper trading to the first few months just to get a hang of it. And then once I got a hang of it, I added money to the account and then started to trade with money, and the rest is history. You guys have any questions so far? So I just don't rush ahead. Are there any messages in the chat, Kenny?
No. I think it's pretty straightforward, man. Honestly, dude, I want to commend you, man. Like, honestly, I think you and I think alike, man. A lot of the things you're saying, I teach to my members on, risk management, how to just learn your basic patterns, right? Because like you said, these things are repetitive. I know people that read the whole 150 patterns and they say it, dude, I don't run into half of those. But if you know your cup and handle, your inverse head and shoulders, your bull pennants, bull flags, wedges, those are the ones that you run into pretty much on a day-to-day basis. Those are the ones I run into. Look, and he just proved it right now. Those are the ones he runs into in the stock market. So those are patterns that you guys really, really want to digest. Really put your heart and soul into learning these things, man. Because again, look, what he's saying is beautiful, man. Like, this man, I could tell, has worked hard at his craft. He puts countless hours back testing, paper trading. I told you guys that paper trading. Right? You want to paper trade especially if you're just starting. You don't want to start any market, stocks or options or crypto, forex, with your bank account, with your savings. When it's your first time, you're gonna lose it. You understand? But once you start getting, the practice in, the homework, then you start investing in yourself. Right? You start learning this, and I think again he's been able to hit it on everything he's saying. Like, I love people that talk with truth, that don't sugarcoat things, that just tell you what it is. He's telling you guys what it is, man. Like, I love it, dude. I'm impressed. Good shit, Chris.
It's super simple.
Yeah, man.
People really overcomplicate. There's not the only process of finding a stock. They overcomplicate everything. They try to. And there's people me talking about indicators that I don't even know about. I mean, because I've been using pretty much the same indicators. I really don't even need indicators. And RSI is good to have, and EMAs are great to have. But I could trade the graph without even any indicators. I mean, just understanding how the graph moves. It's not always just graph patterns. It's just understanding graph movement. I mean, understanding how something could move. It's really kind of comes down to understanding trader psychology, which is not something that can be taught. It's something you just have to start to realize by yourself. Notice, how different stocks move when they move a certain way. If something runs up a certain way and then falls down. If you see a similar stock do the same thing, and let's say in a week, and let's say today we saw something run up, similar like I don't know, 100% run up, and then it, head and shoulders, and it completely knifed down. You saw something similar to like that same setup a week later, you could already know that it's probably going to do the same thing if it's setting up the same way. So understanding patterns of the market, like I said, not graph patterns, but just the way the market moves. A lot of these stocks follow each other. I mean, that's why, most of these small cap stocks I've traded more than 2 times. Like almost all the stocks that I learned, I've already probably traded before. So I kind of remember slightly, how they move and what they like to do. Because there are some stocks that have a really nasty history with knives. So I kind of tend to stay away from those because I hate getting knifed on. It's literally my biggest pet peeve with the market. Like, I'm fine with taking a loss, but when it's a knife, it's just annoying. It completely ruins the trend, ruins the setup, and all that. But when it comes down to understanding the market and all that, really the big thing is consistency. Consistency not only in profits. You can't be consistent with profits unless you're consistent in these categories. And these categories are staying consistent with sizing. You should not be putting $100 into one day trade, then putting $100 into another day trade, unless your cash is tied up. Because let's say you take a 30%. No, let's say you take a 40% win on the $100 play, make $40. You lose 10% on that $500 play, and you're still down. And it's only because you're not consistent with your sizing. Not only sizing you have to be consistent with, but you also be consistent with your emotions. You should not be reacting very differently to a win or to a loss. You have to be very indifferent with the market Don't react to it like, oh my God, I won $1,000. Oh my God, oh my God. Like, no, it doesn't work. You're gonna hype yourself up too much. It's good sometimes, right? If you make like 1,000% on a play, like wow, I mean, come on, celebrate, right? But if you're consistent making money, you shouldn't be celebrating after every win. Just keep moving on, keep grinding, keep looking for those setups. Don't overcomplicate things. Be as simple as possible. I really value simplicity because that's kind of, I mean, look at my screen. There's really nothing there. That's all there is. It's just understanding the market. And then the final thing is staying consistent with your rules. If you have rules in place saying that I'm not going to trade more than 3 times a day, do not trade more than 3 times a day. The rule saying I'm going to cut losses at 10%, goddamn, just cut the loss at 10%. Stop holding it. If you say you're going to trim at every 10% profit, trim at every 10% profit. Because once you stay consistent with yourself, because when you're staying consistent with your rules, you're pretty much staying consistent with your own beliefs, your own self. It raises your confidence because you know that even if you're losing on a day, if you stay consistent with your rules, if they do work, you'll then go and profit. So in all those consistent categories, like if you stay in those categories and stay consistent with them, will then translate into consistent profits and just consistent money rolling in. I mean, this week was probably the one of the slowest weeks I had. I mean, today was a bloody day. I mean, anyone that trades the small cap market would have said the same thing. You just had very random pumps and dumps, everywhere. So I sent it a message earlier in the day saying that I'm going to limit the amount I play with. Usually I play with like 20 to 50 grand per play. It's big amounts, but today I was limiting it to around 5 to 10,000 per play. And by me doing that, I really limited my losses. I didn't make much. I think I came out around 2.5 thousand profit today, but I really limited my losses. And I was playing with, I mean, the small amount of money you play with, the more relaxed you are. I mean, if your account's 50,000, you're working and you put in $200, and then compare that to if you put in like $20,000. I mean, there's a huge difference in how you would react to the play. How would you how panicked you be while holding the play? So being able to understand when to size down on some days where it's not looking too good and you could expect some losses is very, very important. Just being able to realize that fighting against the trend in the market is not smart. To play along with the market, if it's not great, you have to understand that and size down. If it's very, very good, you can continue playing with higher sizes, capitalize on those profits. But just the understanding what is right for you and what's wrong for you is super important. Follow what you feel is best. Don't come asking me, Chris, how much should I put into every play? You put into every play how much you feel most comfortable with. So I'll always give you the most generic answer, right? 10% of your portfolio, when in reality, I never do that, ever, ever. If I were to do that, it would pump the stock up. I put a set dollar amount into every play. I know people with $100,000 accounts and they put in 50% of their account into every day trade, and I have nothing against that. I know people that have $100,000 accounts and they full port into every day trade, and I also have nothing against that. I'll only have something against that if they, as a trader, are not capable of trading with that amount. You know how to trade with a bigger amount. If you know how to trade with your whole account at one play, and be my guest, you can multiply your account beyond belief. So understanding yourself as a trader, and don't try to change yourself. You as a person before the market were not really a big risk taker. Don't try to change your personality and try to become a risk taker. It doesn't work. You cannot change habits that easily. Habits are I've read so many books on habits and research and all that, and habits are not something you can change. I mean, that's why it's like the trader psychology is so interesting because traders have like the same habits, which is why there's things called psychological levels where if it breaks this level, it goes to this level. And I actually have a blog post on that. But just stay consistent with yourself and play with the amount that you feel most comfortable with and simplify your trading as much as you possibly can. Do not have 50 lines on your screen. It's not going to tell you anything more than what I see from looking at one line. So just remember that.
Facts, brother. We have one question real quick. Where is it? They want to know if he do overnight trades. I'm curious if he does limit or market orders when you do overnight trades. Because I see you also play with pre-market and after hours as well. Yeah.
I do play pre-market after hours.
Nice, man. Nice. Love the grind. Very nice.
Yeah. I mean, when it comes to market hours, I mean, market order is the best in my opinion during market hours because especially with higher volume stocks that are up and down, you're going to get filled pretty fast. And sometimes those market fills are actually pretty nice. Like they fill you like lower than the bid sometimes, like rarely, but they do sometimes. So market orders for your market hours. I mean, of course, for pre-market and after hours, you can't do market orders. You have to do limit orders. When it comes to overnight swings, I really don't understand kind of what the question is trying to ask, but I I mean, it doesn't really matter. I mean, you can enter the play for an overnight swing with a limit or market order. Doesn't really matter. Unless like the bid and ask spread is super big, the market order won't give you a worse entry than the limit order. I can promise you that. I think that should have answered it.
I think it was breaking up. Wait, real quick. Can you guys all hear him? Because I think I just had somebody write me saying that they can't hear your audio. I can hear you perfectly, and I can see your screen,
Yes, clear.
right? Hold on, Twisted. Can you hear him, Twisted, or no? Oh, you got it. All right, go ahead, brother. Sorry.
Want me to repeat what I said?
Wait. Oh, wait. I mean, he thinks some. Oh, no. I think he was talking, but he doesn't trade crypto, right? You don't trade crypto.
No, I do not trade crypto.
Yeah, he doesn't. He doesn't do crypto, brother. He does strictly stocks. But again, the times that he does it, he's in there pre-market before the market opens, which is super early, man. And he's even doing it after hours, which I think, if I'm not mistaken, to correct me if I'm wrong, it's still 4 hours, right, of after hours, right, from like
Yep. Yeah, it's
yeah,
from
yeah.
4 p.m. Eastern. So
4 to 8, correct. All right, so yeah, man, that's that. Well, believe it or not, brother, that's why I moved to crypto, man. Because as much as I love charting, like I love the fact that I can chart 24 hours, right? And if I'm back testing all these indicators, bro, like nothing better than a 24-hour chart that is running, right? Like to back test these things. This is one of the I love crypto, man. But I am dabbling with options again, man. I miss stocks. It keeps you really grounded on knowing both markets. To be honest, you can play kind of both of them. Right, if you kind of anticipate the right move. So nice,
yeah,
man.
I actually do trade futures here and there, so it's also pretty much 24/7. Doesn't not on the
Yeah.
weekends, and I'm kind of glad I don't trade on the weekends. I need to take a break, you know. Uh, futures are nice though. When futures have volume, they're such easy. Like,
Absolutely. All right. Anybody else have any questions? If not, again, keep just writing them in the chat.
let me finish off with one thing.
Yeah, do your thing. Do your thing.
I have a lot of people always DMing me and saying like, "Oh my God, Chris, like my goal in life is to become a full-time trader." And I'll say this straight up, it's nice. You can make a lot of money from it. Having something on the side at all times will keep you sane. Like if you just day trade every single day, you're stuck to the screen more than 10 hours straight. And that's why you sometimes see me like taking breaks throughout the day where I'm not even like alerting or sending any updates out. I usually like, trade from around what not no yeah like I start trading actively 30 minutes before market open up until around 12 p.m. Eastern. And then I usually don't really trade too much up until like 2 p.m. Eastern. So it's a nice like 2 hour break that I take right there. Now, of course, I have my market open if I see something, but I'm not like actively trading. That's what I feel like people are losing their most money on is the fact that they always want to play something. They're like desperate to find something to play. And that sense of kind of desperation leads to over trading. You're trading too much. That's a mistake I made today, which is why I kind of limited my losses. Um, Today was great because I limited. I mean, sorry, what am I talking about? You maximize. You like make your losses bigger because you're trading too much. You have to realize when you have to stop. It's a mistake everyone makes. You can be a trader that's traded 50 years and still make that same mistake. It's kind of just a human nature to want to make more after you've already made something. All right, any questions?
They don't have one. 1 minute. I see again that you favor the 1 minute. Is there any other time frame that you juggle with, or you strictly just 1 minute all the time? Drawing your patterns. Like, is any bigger time frames that you really favor first, then go to the 1 minute, or is it just straight 1 minute?
So I mean, I take my trades with the 1 minute, but I do use the 5 minute and the 15 minute to sometimes see kind of a picture. So if we go to 5 minute, let's go drawing tool. So let's scroll a bit. Sorry. So we can see the 5 minute is very nice. I mean, look at AMC for example, right? The whole entire day, excluding this right here, it followed the 9 EMA, ran up, bounced down, bounced off the blue line, the 9 EMA, ran up, bounced down, bounced off the 9 EMA, ran up, bounced down, bounced off the 9 EMA, ran up, bounced down, then bounced off the 21 EMA, and at the end bounced off the 9 EMA. So that 9 EMA on the 5 minute, because the EMAs they do change different time frames, right? Let's look at it this way, right? Remember this graph, and then let's go over to the 15 minute.
Good night.
You can see on the 15 minute, it really never hits the 9 EMA. It just continues to move up. But different time frames give you different EMA placements. So sometimes I usually stick to a 5 minute and 1 minute. 5 minute gives me like a sense of where it can move in the next like 5-10 minutes. The 1 minute just give me an understanding of where it'll move in the next. The 1 minute can kind of give me an understanding of where it'll move the whole day sometimes, more than like the 5 minute, because it just shows me so much. And if you understand what it's showing you, then it gives you a huge advantage. That's really it when it comes to time frames. Of course, if I'm looking to swing, I look at the daily sometimes. Sometimes I look at the daily. What's that? I look at the daily sometimes when even day trading. If I'm trying to find if the stock is like running up, running up, running up, I might look at the daily to see where there might be a rejection point, because you can draw out resistances by looking at the daily chart. It's the only time I would look at something other than the 5 minute. Alrighty, anything else?
Yeah, we got, hold on. One, let me see. Oh, one, they're saying thank you for the psychological part, that again, man, I preach it, bro. Like, beautiful. Analogy with the psychology, right? Big plays a huge part. A lot of people don't even know that, 90% of getting into the psychology. So, much needed. That's amazing. EMAs can change, but sometimes 200 EMA on the hourlies, 800. No, do you use fib levels? Curious as to how they come into play. No, right? You don't mention or fifth level, do you? By any chance?
The bubbles, yeah, no, they're nice. I don't use them for day trading. I use them for swinging mostly. I know people that do use them for day trading, but like I said, I don't really use them for day trading. I mostly use them for if I'm looking for a swing sometimes, and it's more of kind of like a midterm swing. That's kind of when my fib levels come into play.
We got another question. Is there any reason you don't do crypto? Because, and again, I'm even backing up that question. I mean, you're great at charting. I can tell you're pretty good at charting. Hitting your levels, and again, making it simple. Honestly, brother, crypto is the same thing. Exactly what you're doing with the charting. Like, it's pretty much that crypto. Is there any reason why you don't dabble into that?
Like, no, I can't really say I did play crypto. I did play some crypto. I mean, I hold a lot of Ethereum, like a lot of it, and but I don't exactly trade it. Like actively, shorting, longing, and all that. I could look into it, but I don't know. I really just don't want to add more trading to my day. I'm already trading so much.
12-inch fan. I hope you don't have it. I really don't have all the way into this inside. That's way too big. That's 16. I need a 12. No, it's not.
Buddy, can you mute yourself, man?
It's
Yeah,
not.
what's going on?
It is, but it's not. Oh, they want a different.
Sorry about that.
It's all good. I thought he was asking me a question. I was like listening in. I was like, what's going on?
Yeah, even I thought that until I was like, wait a minute, is this dude on the phone? All right. Yeah, I don't have any more questions in the chat. I think somebody's typing right now. If not, you got, I guess, 5 more minutes. Whatever you want to do. It's up to you. Wait, hold on. Do you usually trade the same stocks, or how do you look for opportunities in the market, concept, or short squeezing? I mean, I'm short squeezing. I apologize.
Let me say something right now. This might I really don't believe in like short squeezes. Let me kind of break down my theory here. First of all,
You
short squeezes never came into play before AMC. I am telling you right now. I mean, they were never something that people talked about. People just there's so many different terms that people started to use after the AMC and GameStop squeeze. Short squeeze, okay, right. When short starts to cover, it could cause an upturn, very slight one. It doesn't cause a stock to run up 100+%. The only thing that causes a stock to run up that much is people believing in the short squeeze and them just buying in, buying in, buying into that play, which then drives it up. And then people credit that move to a short squeeze. In reality, it's just them pumping it up. So that's that. And I could, if they were to uncover the truth behind it, I'd probably be right. The short squeeze doesn't have that much potential to move up. I mean, the short squeeze, it doesn't, shorts covering don't have that much. They don't have that much like.
And Chris, can I like give you some suggestion, like whatever you like feel suitable for it? Like I would say, like, can you beside the day trading, can you please post some projects or the some positions like for the long term hold?
Exactly long-term holder. I can get like I don't want to alert things that don't really go along with my
Yeah, that would
being
also like
work.
uh,
I
uh,
could let you know. I could let you know some of the long-term holds that I like. I mean, it's SoFi, SoFi, SOFI.
yeah, sure. And one more thing, like in stocks, like what do you call mean by long term hold? And in crypto, it's like what I think is it's something else as compared to stocks.
When it comes to stocks, I mean the textbook definition is a year or more.
Uh
My
huh.
eyes, I'm a more short-term trader, so I kind of shorten it down. So anything above like 6 months, in my opinion, is long-term.
Okay. Okay. I would really appreciate.
Yeah, I could hit you up with some stocks and DMs. Just DM me after this.
Sure, sure.
Ready. And like guys, just in days where it's red, don't try to force plays. Step away from the computer, phone, lap, whatever you trade on. And sometimes it's best to call it a day. Like I said, understanding yourself, understanding where your limits are, it really will allow you to be more successful. Because like I said, don't try to go against who you are. You're not a risky type person. Don't take risks. Don't take huge risks.
Just
You're
like you
someone.
said, I started the same way like you're telling now. Previously, I like uh, lost my 4K, but no, I just like decided I would not go above some certain limit, and I'll strictly follow the SL. Previously, I didn't care for the SL, and that's why I lost like much of my money. But no, I first think of SL and then go for the trade.
That's you have to have rules in place before you take a trade, or get close to
Yeah.
after you take a trade. Ready, guys? Anything else? Anything else? Then I mean, next week I hope will be better. You have a Monday, fresh day, fresh volume. Of course, MEGL could bring back the hype. There was supposed to be another another stock that IPO today, ONFO, and they never IPO. They were supposed to IPO yesterday. They didn't IPO yesterday. They were supposed to IPO today. They didn't IPO today. So I have like no idea what's going on with that one. But that one's also one ONFO can be an IPO pretty soon. But MEGL, top watch. I mean, that could be a massive, massive mover. It could make
And
people big, big.
yeah, sorry, Chris, to interrupt you, but sorry, like if I didn't listen like before it, like I have a question. Like just like in crypto, we can place order at any time, but in stocks, we have to wait for the opening time.
You can, I mean, depends what broker you use. What stock broker do you use?
Webull.
Webull, so perfect, yeah. So Webull allows you to also before I say anything, what time frame are you in? Time zone?
Eastern, New York.
Eastern. Yeah, so you will be able to put orders in starting at 4 a.m. up until
Oh,
8 p.m.
okay.
Yep, so from 4 a.m. to 8 p.m. And pre-market is from 4 a.m. to 9:30 a.m. And then at 9:30, the real market starts and it ends at 4 p.m. And after hours is from 4 p.m. to 8 p.m. So when it comes to like the after hours and pre-market trading sessions, have to change the day, like when you're putting an order in, instead of having it a day, put it into GTC, EXT, or
Hmm.
it should say like pre-market. It depends, I believe.
Okay,
So
yeah, because previously, like when you posted in the group about the AMTD, I was looking and you remember I texted you like I was not able to find the ticker. So then you texted the whole name, and because at that time the price was like it was after the stock closing, and the price was near to the 3. And so I was just like comparing, like you mentioned to place the limit order at 6, and no, the price is 3. I was like a bit confused at that time.
so it's just because Webull, I mean, it shows you the price that it closed the market hours at, and then below that it shows like where it was in after hours. But yeah,
Okay.
but AMTD was a nice one, ran from like $6 to $14 overnight. That was quite the surprise.
Oh, okay.
I
Thank
mean,
you,
if you have
man.
like for sure, said if you have any personal questions or anything like that, DM me and we can sort that out.
Sure.
Oh, I
Alrighty,
just want to
man.
ask, you trade IPOs only, right?
No, no, no. I trade anything, any stock I like. No, no. I only trade IPOs that I like that are looking just because IPOs are really hyped up right now.
Yeah.
So I've been trading a lot more of them, but no, that's not like what I trade. IPOs are very cyclical. Like there's stocks like every week that IPO, but they don't get hype. But now we're kind of in this time where people are looking to make money, so they're hyping up IPOs. So I'm playing more of them, but I just trade small caps, low floats, just day trade them.
But one thing that impresses me, like you find plays instantly, like fast, and like all the time there's always different coins. Not different coins, different stock names with different tickers, always.
I mean,
How did
yeah,
you
it
find them?
definitely is. I mean, like I said, you can create a watch list, right? In pre-market, you search the biggest movers in pre-market, go on investing.com, or like you can use a screener, just like the easiest to do with like the Google search, because like many people don't want to create a screener, so that's why I'm talking about it this way. These movers in pre-market, investing.com, go on the link, investing.com. It shows the biggest movers. You look over the ones. Of course, if you trade crypto, you should have some understanding of TA. You can't really be trading crypto without any understanding of TA. So then you use your TA knowledge to find the plays that you like best. You put them into a watch list and then just watch those plays. There's also something called scanners or screeners, whatever you like to call it, that you can pay for or create yourself that kind of alerts you whenever there's a volume increase on a stock, so that that way you can add in new stocks to your watch list as the day goes on.
Yeah, if you guys need a free one, I think Finviz. I used to use Finviz when I used to trade stocks and options, and that one really works really well. It's great. Any scanners?
The Fenviz is pretty good free
Write that
one.
down. That's good.
All right, any final questions, or gonna go to sleep because I am. Oh my God, it's been a long week.
Yeah,
I
I
can't.
think so. Everyone is done with the questions.
Yeah, I think that's it, man. Anything you guys have for him personally, DM him. My son is. Yeah, DM him. It's Friday. My man is tired, man. It's 10 o'clock. He did amazing week, and it was a shitty week, like you said. And he put out some fire calls, so I know his brain must be exhausted. Chris, honestly, man, like I am impressed, bro. Like, which not only your charting, but your terminology, your psychology of it. Like, it's a lot, man. And I love to hear from other traders because again, some people think that it's just drawing lines. They don't know that it takes a lot more than that, right? Like it's a lot. So you hit up on everything that I look for in good traders, man. Like, and it shows. Your work shows. So thank you for joining us. Spreading the good vibes, the knowledge, like to these guys, man. I know they appreciate it. I appreciate it. And we definitely got to schedule another one soon, man. Like I would actually like to have you here one morning. And again, I have to wake up early in the morning too because I'm in the West Coast, so it's like 6 in the morning here. But to have you join the guys here because I know we do have some stocks and options fans here. It's not only crypto. So maybe we'll hire you one night or one morning to do a live. And I'll jump in it too to see what you see and maybe we can learn from each other, man. But thank you, thank you again, man.
And guys, I want to say one thing. Like, if you want to DM me, DM my actual account. Um, Like the comp that you see in which chat is it? In like GVT chat, that's the account that you have to DM me to because I do receive DMs to my bot. I can answer them, but I choose not to because I get like over 100 DMs every single day, and the way the bot is formatted just doesn't allow me to easily answer to DMs through the bot. It's easier for me to answer your questions quickly through my actual account.
All right, well, that wraps it up, man. Guys, thank you for joining. Chris, thank you again. Again, I'll try to get you in here as soon as I can. Let me continue, working on the server, man. That is still very, very new, but has potential, man. And I really like the way this thing is heading with this server. So I really, really look forward on having you here again, man, and doing these amazing classes, teaching these guys, that there's just way more to trading than just doing lines, jumping in any call. So thank you, brother. Guys, thank you for those that missed like the first half or whatever. It's being recorded as we speak, and I will upload it in our YouTube so you guys could check it out. Thank you again, everyone. Peace.
Nice nights and nice weekend. We'll make some good plays, make some good bank come Monday. See you guys.
All right, good night. Bueno.